Hey guys, how are you? Vladimir here from Home Trader Club. This is a weekly review of what? Of the last week trading activity. So what is it all about? And I want to explain it because it's a new idea that came to my mind following requests of many of our followers. So recently, several months recently, more and more people are asking to explain how I spot the trading opportunities that I share in Home Trader Club and how it's delivered, in order to understand how they can use that in the most optimized way. So there are many ways we give not signals, trades, educational trades in an educational way in Home Trader Club. Either the weekly live sessions, which we have on Mondays usually, of course the trading group, and also in our all-inclusive package, our all-inclusive members have the access to short trading group. This is a group that we run together with AUDCAD broker. So it's a group for those who are looking for short-term trading opportunities. So various of ways we discuss about all trading opportunities in our chats, in the live session we have on Mondays, and also in the short-term trading group, where the way the trade is delivered is in an educational form in order to be able to know what to follow and where to trigger. So I want to share in these videos, I don't know how many videos of this I will create, but this is the first episode. I want to see, of course, what's the feedback from our followers, from your emails, your comments. I want to understand if that brings value, so you know how I spot my trades, why I do the way I do that. So for those of you who don't know who I am, beyond all the experience of trading and my past in broker houses and my past with private funds, I'm also internationally certified financial technician. So analyzing all these charts is what I do many years. Analysis by itself means that you spot the opportunity. Analysis by itself gives you the big edge when you are able to read on high probability, because of course it's never 100%, but on high probability where the market is expected to make the move. Either up, down, range. Is it good zone to be in trade, or is it a zone that is best to avoid? So I want to, in these videos, series of videos, in several episodes, maybe more, I don't know, to explain the logic behind the trades when I pick them. How do I analyze, why, and how do I prepare the trade? The preparation is everything, because then when the plan fulfilled what it's supposed to do, when the plan triggers, then the execution is like a machine. Enter your trade. If it's straightforward, if it's day trading, then it's for day trading. If it's for longer run, it's for longer run. And if it's with protection, then with protection. If without, then as an investment. Many various ways, but always based on the rules. So that's the idea of this video. So I will be reviewing now all the, not all, because it's too much, but some of the trades we discussed in Home Trader Club in the previous week, in the past week, okay? Based on different strategies, different techniques and methods, but with one always same leading guide. That's multi-timeframe analysis based on cycle, divergences, levels, and waves. Always the same. The entry could vary, the technique could vary, the trigger could vary, but the whole concept of the analysis is always the same. But before the charts, as always, big thanks to AUDCAD Broker for their support in our community, and I want to invite you to explore all the offers we have with the broker, where you can get your access absolutely free to all of our projects. The link is below this video in the description. So once again, the format of this video is educational. It's not a signal, it's not anything like that. It's to explain how do I pick my trades and why. The good and the bad, the how and the when not, and what to do. So let's begin with the first one. So our first one was AUDCAD sell. This trade was at the beginning of the week from the short-term group. After that, it also was as in our main trading group based on a setup. The short-term trading group is for 1 day up to maximum 3 days, and the idea there is to quick in, quick out. That's the idea, bottom line. So I want to explain how it happens. On a daily chart, we spot bearish divergence. As you can see, higher highs on the chart at the end of 3 waves. We are around quarter of round number 0.9250, and a bearish divergence, lower highs on the moving average of the MACD, while the RSI does the same. Fantastic, first sign. Then on the lower time frame, this is a 4-hour chart. On the lower time frame, we basically start to have the price flips. If we had a sequence of higher highs, higher lows before, then now suddenly we start to see lower highs, lower lows, and the previous lows on the way starts to be tested, and some were broken. Now this is a great sign, and in that case, when I spot that as long as the high holds, I want to see reverses and continuation down. So the question now is, how do we spot the levels and where we want the trigger from? So broken supports become resistances, high acts as supply, and ranges before waves. That's the key levels I pay attention to. So what is the sell zone 1 and what is the sell zone 2? And the trades we look is in between them. So how do I love to trade during this the short term? I love the prices to get in. I love to see the rejection from rally, higher highs, higher lows, to lower highs, lower lows. That to me gives a trigger, and all remains relevant as long as the levels hold. As simple as that. So in short-term trading, I love to take between 1/4 to 0.5% of the instrument. How do I calculate that? The first 3 digits of the quote, in our case 0.91, let's say 0.90 just for the round number, 90 pips. That's 1% change. First 3 digits of the quote. Okay, so half of that is going to be about 45 pips, which means 22 pips is going to be the 1/4%. So between 22 and 45 pips, that's the logical target to aim. But I also, of course, pay attention to the next key levels we have. What are the next key levels in all that scenario? We have the rising trend line, of course, important zone. We have this range, right? Range before the buyers took control, another important zone, which pretty much is the same zone around the rising trend line. And of course, the next is the previous lows. That's where the buyers were, right? They took control from the buys. So what happened there is, as we enter the zone, the first zone, we start to see the price rejection from higher highs to lower highs and lower lows. That gives the indication. Then the market tried once again and made another lower highs, lower lows, and basically make the drop to the downside. Later on, it became a much bigger move as soon as the trend line was broken, and it actually went all the way down to retest the previous lows. So once again, if this is our range, right, and we are in the game, I check, okay, so in this interval, how many pips I can take. Remember, I want between 1/4 to 0.5%, right? So this is about 40-50 points, which stands perfectly to the range between the 1/4 to 0.5%, which for me means it's a legit trade. So AUDCAD sell, this why it happened the way it did. Let's talk about the next trade. Next one was Aussie Kiwi, also from the short trading group. We got a trend, 3 higher highs, higher lows, more than 3 higher highs, higher lows. Absolutely strong sign, but without reversals completed. Meaning the divergence did not yet tick, and we didn't have the wave to the downside yet, and the lows are not broken. So the buyers are still in control. That's the bottom line. More risky, yes, but still in control. So the plan here is get in the buy, okay? And where from? The support, this was a resistance, now is retested, becomes support. The previous resistance acts as support. So this is a classical zone 1, right? And we already see the price making the rejection from lower highs, lower lows to higher highs, higher lows. Perfect sign. Second zone is demand, 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 and the demand of these waves, and that creates for us the zone number 2. So what I want to see, I don't know if the zone 1 will hold. Of course, I'm in, and as long as it holds, I'm in. But if it doesn't, then I'll be looking from the from the second zone, the same price rejection, and then get in the buy. So what happened there? It was straightforward. We actually got, you see, after that, market went drop down, and then again higher highs, higher lows to deliver the rally. So once again, 1/4 to 0.5%. That's what I am looking at. 1% is 113 pips, the first 3 digits. Half of that, that's about what? About 57, yeah. Pips, and half of that is going to be about 29 points, approximately, right? 28 points. So from this zone, I'm looking basically at the previous peaks. We have the peak, right? That's the key zone. And I'm asking myself, okay, what's the interval there? That's again about 40-50 points, which falls perfectly in this range, which means I have a legit buy trade to trade and enjoy the rally. So this is how I spot here the buy opportunity. And once again, the most important thing, as long as the levels hold, if they don't hold, which could happen, does happen sometime, cut it out. That's it. Look for the next opportunity. Let's talk about the next trade. EURCAD is the next trade, and we had this one in 2 variants. One, this trade was discussed in live session, okay, on Monday. So it was basically discussed live on our Monday session. The idea here, aggressive and conservative. Aggressive was given on the 1-hour chart. Conservative never trigger yet on the 4-hour chart. So it was only the aggressive trade that triggered here. What did we have here? Absolutely simple, straightforward. This is the rising trend line. We got the break. Look at all these long divergence. Look at the sequence of false breakout. Fake high, fake high, fake high. And at some point, boom, we got lower lows on the chart and lower lows on the MACD histogram, making it a full convergence. For me, it's a brilliant sign as long as this high holds. Broken support becomes resistance, last high acts as supply, and this is the trigger zone. There I want to see again price to reject. Why? I just don't want to see this straight run through, because that means that the sellers are not holding. As simple as that. And once they manage to hold and start to deliver the lower highs, lower lows, this is a great indication that sellers are stepping in the game. And to be able to deliver to the next important lows. And of course, once we start to see bullish divergence developing, it's good time to enjoy the profits fully or partially. So this is how we spot the EURCAD aggressive one, straightforward, based on convergence. What does the convergence mean? It follows with divergence after the trending condition, higher highs on the chart, lower highs on the moving average density, then flip the price, making lower lows on the chart and lower lows on the MACD histogram, giving the convergence. That's the indication that we have a potential reversal in. In that case, it worked out pretty well. Next trade, Euro Pound short-term trade, was given in the short-term trading group. Once again, this is part of our all-inclusive package. Very simple, rising supportive line. In this uptrend, in the recent waves here, we also have a demand level here. So last low acts as demand, last low acts as demand in the bigger waves. That creates a phenomenal zone. And of course, rising supportive line, when we connect all the lows, gives us the great level. So the plan is simple. We want the price get there and rally. Straightforward. So this is the zone we marked before, as we discussed, right? This is the dynamic trend line. What we want is the price to get in, complete a bullish divergence. You can give this as the explanation, right? That's for the trade that was given to the members. We want a bullish divergence. And same story, guys. From this, that's what we want. That gives us the buy sign. So why? Simply, we have key zone. We have, if we have the rejection and bullish divergence, we want to take a buy. As long as the zone holds, it's relevant. If the zone doesn't hold, we cut out. That's simple. So here it is, right? We get in the zone, we reject the line, we make the higher highs, higher lows. At that very area, right? Voila, the sign is given. Up to where we are going, the next key levels, that's where we want to aim. Okay, so this is again short-term group, so we want 1/4 to 0.5%, in our case between 22 to 44 pips as the target level. So we check from this zone to this zone, that's about 35 pips, which falls beautifully in that category, and we are given a green light to attack the buy, which in that case also delivered. Next trade, Euro Dollar, discussed on live session on Monday. What we got there, rising supportive line is broken, lower highs, lower lows on the chart, breaking the recent low. And basically what we want is either ABCD and then a continuation, or some sort of a range here and then continuation down. So the way the euro worked, it created this mini range, right? And managed to, and managed to get the breakout after 5 spots, 1, 2, 3, 4, 5, and voila, the move to the downside. The logic is, as always, multi-timeframe synchronization. 4-hour chart gives the waves. We analyze the weekly and daily chart that shows that we expect to see another wave to the downside. And that's why when the higher time frame and the lower time frame, when you look to trade, are synchronized, you have higher probability setup. No guarantee, higher probability setup. So that was the euro dollar that made a beautiful leg to the downside. And the way I spot that, once again, wave combination. Broken trend line here, here, right? All the lows in the retest. Lower lows, lower highs. The last low is broken of the rally, right? So it's either ABCD 2 waves up and then we look for the sell, or a range and then we look for the sell. Straightforward. As long as the supply zone we have here and here manage to hold, because that's where the sellers managed to take the control. Think about it this way. If this was the last waves, sorry, let's redraw that, right? If that was the last wave, this is the high before the price flipped, right? This is the low, was broken. So this high gets the value. Now this is a sellers in control. This high, sellers in control. So as long as it holds, the sell is relevant. If it doesn't hold, it's a different story. We have to accept it and look for better opportunities. But as long as it does hold, we are looking for the sell. And in that case, 2 waves up or a range breakout, and we expect continuation. So this was the strategy that we picked behind the euro dollar. Pound dollar was similar story to what we saw on the euro. Again, live session discussion on Monday. What we had there, broken trend line, comes for the retest, 2 waves up or a range, and we expect continuation. Similar to the euro dollar. Another important thing to pay attention to is the supply levels. So that these were the higher highs, higher lows, then it flipped. Right? Now it's making lower highs, lower lows. So this high has the value, this high has the value we want to sell. And that's why we were given the sell direction in the trade. There is also the volume profile zone here. This is based on the KTLI indicator of ours. And now we want the break. So what happened with the pound is similar to the euro. It managed to get this range, low, high, and managed to give the break. You can see it also breaks this major weekly support line and places itself below the volume profile, right, to make a beautiful move down until it develops a bullish divergence, and then this is a great time to make some money. Okay, so once again, what's the strategy behind this range breakout, but after wave combination? Once again, what did we have here? Rising supportive line that was broken down in 2 waves. We got the lower highs, lower lows. As long as the supply is on hold, we're looking for the sell, either after 2 waves or a range breakout. Now, very important thing here. Can I predict what will happen? The answer is absolutely not. And you have to remember, guys, trading is never about predicting. The market doesn't care what I want. The market doesn't care what you want. The market will do what the market has to do. We have, as traders, one job: to react to the price act. That's why the more detailed plan you have, and that's what I explained to you here, that's what we do in Home Trader Club, giving the exact plan, then the execution is mechanical. Happens, you're in. Didn't happen, don't take it. Okay? You missed it due to personal reasons, let it go. Don't chase it. But it has to be mechanical, because then the execution and the risk management is very easy to follow. When it's a specific plan, a specific a zone and specific execution, it's easy to enter and it's easier to manage. The final trade, also from the short-term group, once again in all-inclusive package, was short-term gold sell, overbought condition on the daily chart. As you can see, new peak on the price, spiking above 4,000, bouncing back. You can see here, overbought, RSI above 80. This is on the daily chart. 4-hour chart, similar story, RSI above 80. Picking there, beautiful drop down and beautiful bounce, first one, and the 1-hour chart making a beautiful double top, right? Pick, double top. So I find it very great opportunity. Then we flip down, we make lower loss on the chart and lower loss on the indicator, all that after a bearish divergence. So it's kind of easy decision here. We want to sell. So the levels, with the way we picked the levels, was basically on the lower time frame. How? Same story as always. This low is broken, so this high acts as a supply. This low is broken, becomes a resistance. Classical combination, sell zone number 1. Then broken support becomes resistance. This is the peak of this wave, becomes a resistance or supply zone, similar here, right? And of course the last high here, or here, and that makes the sell zone 2. What do we want from the sell zones? We want the price to reject. How? From higher highs, higher lows, from any of the zones, right? And then deliver us the sell. We would be aiming basically this zone. This is a key zone here, as you can see, right? And this is also a potential level. So that's what we will want on the gold. And as soon as the price enters the zone we discussed, right? Basically look for that. Look what happens here. Low, low, higher low. Bullish divergence. Signs against. Bullish divergence is a bullish sign. We are in a sell. That's a very easy step back in that case. And cashing out, as simple as that. Remember, the idea of day trading or short-term trading, the way I execute it, is in and out. Ideally in the same day. If it's a 1 hour chart, it could last for 2 days, sometimes 3 if the market's super slow, but that's the maximum you're looking to take into squeeze. That's it. So that's it. This was our trading week in majority. There were some other instruments we discussed, like the AUDCAD break of trend line, like the indices as well, and some others. I can't cover everything, so I wanted to give the different approaches with same analysis, as you can see, but different triggers, and I want to explain them. So once again, this is an educational video. I want to explain how do I pick my trades and how do I love to take my execution. Simple. And I hope you find it valuable. So for all those of you who asked, how do I determine the trading opportunities and why in Home Trader Club, how do I do that, and I wanted to see examples, here are examples for you, and I hope you see the value in it, and I hope you understand how powerful this trading technique is. The multi-time frame analysis with spotting the waves and spotting the levels and looking for the executions. Maintain that, do the proper risk management, and you will be doing just great. That's it. If you break the rules of any of the things I mentioned, the results would not be there. As simple as that. So thanks for watching. I'll see you soon with more. If you have any questions, don't hesitate, of course, to reach out. And I wish you all the best, to you and yours. To all those of you who celebrate Happy Thanksgiving and Columbus Day, if you're in the US, I'll see you soon with more. Good trading. Bye for now.